And appellate reverses the decision against Bank of America in the Hustle case, and risk on agency first-time buyer mortgages reaches a serious high. Ahead on Tuesday's News Wrap. The U.S. Second Circuit Court of Appeals has overturned a $1.27 billion penalty imposed on Bank of America over the alleged misrepresentation of mortgage-backed securities sold by Countrywide Financial Corporation to the GSEs through a program known as the High-Speed Swim Lane, commonly known as Hustle. The appellate court overturned the verdict because the proof was insufficient under the federal fraud statutes to hold the bank liable in connection with Countrywide's Hustle program. The court's ruling stated that the government needed to show false or misleading statements made with fraudulent intent, but instead, quote, critically, the government presented no proof at trial that any quality guarantee was made with fraudulent intent at the time of contract execution, nor did it offer evidence of any other representation, suggestions, or promises, separate from and post-dating execution of the initial contracts that were made with fraudulent intent to induce the GSEs to purchase loans, close quote. The agency first-time buyer mortgage risk index shot up to 15.8% in April, a serious high and an increase of 0.6 percentage points over the year, according to the International Center on Housing Risk. Risk layering responsible for the increased riskiness of the first-time buyer mortgages. 70% of first-time buyer mortgages in April 2016 had a combined loan-to-value ratio of 95% or higher than 97% had a 30-year term. You can check out these stories and all the latest happenings in the industry right here on our site. Thanks for joining us. We'll see you again on Wednesday. Until then, stay with DSNews.com for all of your most relevant default servicing news.